Number one question right now, what are mortgage rates and what are the interest rates right now? Well, stay tuned. We have a mortgage lender here with us.
Welcome to Community Real Estate Roots, Agents Building Relationships, where we explore the heart of real estate through meaningful connections. Join Alicia, Deidre, and Lisa as they guide you through stories behind every sold sign and dive into how agents nurture communities, one home and one relationship at a time.
All right, all things mortgage rates, interest rates, and all of the above. We have Nick with Hunt Mortgage.
That's right. Yeah.
So recently,
We got that right.
Yes. Yeah.
I know, it like literally just popped into my brain as I was saying it.
I meant to
So-
remind you that before we came in. So.
failed, but I succeeded. Anyways, Nick is here, and so let's talk interest rates because that is the question that
Yep.
I get the most. I don't know about you ladies.
Yep.
So what's the market doing?
Yes. Well, thank y'all for having me. Yeah, nice to be invited to be a part of this group. But yeah, that is the big question that everybody wants to ask because when you're meeting with people for the first time, they want to know, hey, what's my interest rate? What's going to be my payment? How much do I have to bring to closing? And that's really what buyers want to know. So in interest rates, I mean, we are, I would say, cautiously optimistic that interest rates are going to get better this year. They keep kind of creeping that way. But I would just say a general view of where interest rates are, number one, is going to depend on what loan program you're looking at, depending on a conventional FHA, VA, USDA. But I would say conventional interest rates are about mid sixes right now, depending on what your credit score is. The better your credit score is, the better your interest rate, lower your interest rate will be. And then on your government programs like FHA, VA, USDA, interest rates are probably with good credit scores, probably low sixes, and you can possibly be back into the fives, maybe paying a little bit to buy your rate down on a government loan right now. So much better than they were just 3-4 months ago. So I think we're trending back that way where we want to be. I think the general public wants to be back into the fives, hopefully the fours, maybe in the next couple of years. And I think there's a lot of optimism with what's going on right now, and things that I think the government is going to do to try to help get mortgage rates back down so that it'll be more affordable for buyers here in the next, hopefully, year to year and a half.
Well, I think that they're watching the rates because I've noticed that I'm getting a few more buyers. At least I've had a few sign some agreements with me, but I've had a lot of questions. So I do think that the rates are coming down a little bit, and they're out there watching, and hopefully we can get them into the mix.
Well, and I think they're realizing too that cost of the real estate is not coming down. So
Yep.
the house, the $200,000 house they want to buy today, by June could be 210, 225. So you've waited hoping the interest rates would come on down further,
But the price has gone
but
up.
the price has gone up. So I call it playing tit for tat for money. You really didn't do anything because you're so focused on the interest rate only instead of what are the other pieces of the puzzle that you need to consider.
Yeah.
And I love because Alicia had one recently that the buyer just told her, it's like, we're tired of renting. We need to get out of here and start somewhere. So it wasn't about the interest rate. It was about, I'm tired of throwing X
Money
amount
away.
of money away
Yep.
a year, and I have nothing to show for it. So
Absolutely.
I think that's got lost in the conversation of the marketplace. The rent noise has kind of settled down, but the cost of rent did not settle down.
I think they need to see the options. I think this particular case was, I think they were paying $1,800, and they were ready to get out. They were quoted, I think, right at $2,100 for their mortgage. And after, looking over everything, they're like, it's worth it. So
Right.
Yeah. Well, and I think that's a big piece that people don't think about, especially first-time home buyers. Nobody thinks about the appreciation aspect of buying a home. You stay in your rental, that's not appreciating. That's probably only going to go up. The landlord's going to probably increase you every single year. But like you said, you have nothing to show for it. Whether you've rented there 3, 4, 5 years, you don't have anything. But if you own a home 3, 4, 5 years later, especially where appreciation has gone really since 2020 with COVID. I mean, values of homes, appreciation, they've gone up considerably. And you can use that as a wealth builder. That's the biggest thing for people, or their biggest asset is their home. You stay in the house 4, 5, 10 years even. I mean, you're going to make a considerable bit of equity in that house that you can then turn into creating wealth for yourself, or turning, the next property into your dream home. You might have so much that you can put enough down to make your payment comfortable on the next house and get exactly where you want to be. And so first-time home buyers, I understand you definitely have to look at that payment. Yeah, got to look at that payment. You want it to be as affordable as possible for you, but you really do have to look at the big picture.
They said they just want to get their foot in the door, and that's what they're doing. So it's working out on that end.
But I agree. I think the important part are what are the options out there, and that's when I tell them I'll go just talk to Nick. There is no commitment to you don't know until you ask the questions and you show. Some of them just want to pick up the phone and call you and you tell them the answer. Well, you can't tell them the answer. I don't think people really remember or think about. I think they think the credit depends on them buying a house. I don't think they really know. It also depends on your credit score too. So you may say, yeah, you can buy a house, but this is where your credit score is going to
And I get a lot of people who, they're scared to go through the process because they just don't know anything about it. And they a lot of long-time renters will say, I don't think I'm going to be able to buy a house. I'm scared to go through the process because I don't know what they're going to ask me. They don't think that they're going to meet the certain requirements that, you have to have a mortgage. Although, I generally tell people anybody can buy a house in this country, really. If you start off and you have the right plan, meaning you're working with the right people who are going to help you along the way, everybody can get there.
The applications you have to fill out for a rental property is almost identical to a mortgage application.
Okay, see, I don't see any of that stuff. So
they have to.
They do a credit check.
They do a credit check.
Yeah.
You have to send income. You have to send pay stubs. The only advantage that is probably different is they don't have to present tax forms. But you still have to go through this. They're sending just as much stuff to the rental company as they would send to you for an approval.
Okay, well that helps you right there too, because then why wouldn't you want to go through the process just to find out? And you might not get the go ahead on day one, but that doesn't mean it has to be over. We speak with a lot of people who aren't quite where they need to be, but we're going to get them on a game plan where they can get where they want to be in the future. And sometimes it really doesn't take that long either. I had someone come to us that their credit score was under where it needed to be to get pre-approved, but literally we sat down with them, we looked at their their documents and their credit report, and we said, hey, if you do this and this, we think you're going to be ready to buy a house soon.
Make a plan.
Yeah.
Yeah.
And it literally only took, I think it took them 2 months. We got their credit score, above where it needed to be. They saved up enough money within those 2 months too. And here they were buying this has been the one that I'm thinking of is about 3 years ago. And I think they bought a $250,000 house, and so it really, it doesn't have to take that long. As long as you go through the process and you're working with someone who's going to help you get to where you want to be, you shouldn't be afraid to get into the process, I guess.
Well, get into something.
Yeah.
And then sell it and move up when you're ready, because we'll get people that'll send us, I love this house. It's like $375 or $425, but they're scared of coming out of a rental and they're looking at this price point. Yeah, they may be able to afford it, but if they haven't gone through the process, I tell them, you don't know until the lender tells you. I'm like, I'm not the one that's going to pay for the house. We need the blessing of the people that are going to write you a check at closing and say, okay, you can move into this house and this is what you're going to pay me. This is what you need to know. I can't tell you that part. I can walk you through it, but I can't give you the answer to that.
Yeah.
So, but I think they're getting better about listening and going, okay.
Maybe.
I just tell them, I go, listen. Not that anybody goes to the mall anymore, but you can search online, right? And you found this gray pair of blue jeans and you want these blue jeans and you haven't checked your bank account. You don't even know how you're going to buy them. And then all of a sudden you figure out, oops, I don't have enough money to buy those jeans. But you fell in love with those jeans. So don't fall in. I don't want to take you to fall in love with something and then go, oh, just kidding. You can't have it.
Yeah. Nope. Well, that happens a lot of times too. I mean, we'll kind of get, typically people go to the real estate agents first. They get their hopes up and then they come to us and reality hits and said, hey, you can't afford that $375 house. We really need you to look at a $250,000 house, and then they get disappointed. But
I blame HGTV.
yeah, that's true.
Oh,
That's
for sure.
yeah.
They
No.
never show the lending part of that. They just buy a house.
100%. They don't. They also don't show the price ticket of the remodel on the house either.
Yep.
It was just this, and this is what we did.
Or the time frame of it, because
Yeah.
it only takes 30 minutes to get approved for that loan, and then you're closed and you're all good. When in reality, it's anywhere from 30 to 45, even 60 days sometimes.
Yeah. Yep.
So from a buyer perspective, are there any other obstacles or anything going on out there that would help us on our end to say? I mean, have you run into anything lately that's out of the ordinary?
Not really. Now, I do think that there are some incentives for first-time home buyers that they're trying to push out there. Better interest rate pricing, all that kind of stuff. So I think they're trying to create less obstacles for people, especially first-time home buyers, because I think they realize that it has been, when interest rates have gone up, it's been more of a challenge for first-time home buyers in the last couple of years. Especially, you've got sales prices have gone up, interest rates have gone up, affordability is probably at an all-time low, maybe right now. But first-time home buyers do get some interest rate incentives, better interest rate pricing if you're a first-time home buyer. I looked at somebody the other day that I think now you have to make below the average median income for the area. So we have to check that on the person. This person was below. If they would have done a traditional conventional mortgage for, repeat buyers, not first time, they would have probably been around a 6.6 interest rate. But because they qualified for the first time home buyer, they were all the way down to 6.1.
Yeah.
So you saved a half of a point. And I mean, that makes a difference, on a $200,000 loan.
Qualified for a first-time home buyer. It doesn't have to be your first actual home ever in life.
No, that's a good question. Okay, yeah,
I didn't know that until I started real estate.
Yes,
Look at you,
okay,
girl.
that is a great
Get
question.
that
That comes
question.
up all the time there. So what they typically, lenders look at it, and it's the government that sets our guidelines, but they look at a first-time home buyer as being someone who has not owned a property within the last 3 years. So, I talked with someone over the weekend, actually, who he's rented for the last 5 years, but he's owned homes in the past. He fits that rule, so he can apply for first-time home buyer pricing incentives too. So yeah, if you have not owned in the last 3 years, you're definitely eligible for us to look at that. Now, some people, there's an income limit on it, so you might make too much money to get the incentive, but I mean, that's stuff for us to figure out,
Is there incentive for couples as well? Is there a guideline, or is it pretty much just single income?
Yeah, well, you're talking about just on like the income limit. Whoever's on the loan for those. Now, I think you're getting into USDA. So if there's a USDA rural property, that is a guideline where they look at the total household income.
Yep.
So on a conventional loan, they're just looking at who's on the loan. USDA, that's a great product, rural area that does not require a down payment. But they do look at the full household income. So even if you've got a a husband who is, who's on the loan, the spouse is not on the loan, they're still going to go look at the spouse's incomes. They want to see her tax forms, her pay stubs, and you got to, fall below that income level, which in Alabama, it's about $110,000 a year for a USDA loan. Yep.
That's a hard one for them to comprehend, though. Well, I'm not on the loan. Why do I have to?
Yep.
Why do we have to tell that? I go, because you file taxes together. That's why.
Just because you do.
Yeah.
Yep.
You just
It is what it is.
Yeah.
you just do from that. So we feel pretty good about buyers are kind of staying interested out there. Question I have that if we have a seller, so we're the listing agent, we have a seller, we know they're selling this property and they want to go to another one. Sometimes they don't want to get into that part of what's going to happen moving here. They're very focused on getting their house ready and listed and stuff like that. And I'll just let them and go, well, where are you going?
Yeah. Yep.
How do you know if you want to get there? I mean,
right now too. I mean, because the market has changed a little bit over the last couple of years. I mean, you want to make sure that your seller knows what they're getting into on the next house too. So you want to make sure they get pre-approved. Well, number one, they know they're pre-approved and they can buy the next house because you don't want to sell that property if you run into an
right.
issue.
You don't want to be. I tell them you don't want to be homeless.
Yeah, and then also too, you want to look at the monthly payment. That happens all the time too, where people, they own a house, they're kind of looking, and then, they're like, well, what would the price be on this house? And sometimes it's a little bit higher than they want to go. And then they say, okay, I'm just going to wait. I'll just wait a little bit. I had a conversation with a woman last week, similar situation. She'd owned a home for a long time, but was ready to move. But then the numbers just didn't quite work for her right now. To where she felt comfortable that, okay, I'm ready to go up a little bit on my payment. So her plan is she's going to give it about six months, and look at stuff again. And
did she have good equity though? I mean, I just had
I
just had a situation recently where their equity was so good that honestly, the smart thing was to get the equity out of it.
No, absolutely.
And
I can see that.
Even if you go, apples to apples, and start just because it was in an older neighborhood. The older neighborhoods are tough unless it's an area where flippers are going in and moving them and keeping them updated. Sometimes those older subdivisions, it's harder to see an increase in your equity the way that you do in a nicer neighborhood.
Yeah.
It's only been around for 10 years, not 25 years. And this particular house, she'd been in it for 20 years and in this subdivision. And it's kind of one of those you can pull in and, it looks like they have a party in their front yard every weekend, but then 2 or 3 houses are immaculate.
Yeah.
But that can affect your equity.
Yeah.
In your house because the neighborhood's deteriorating.
Yeah, and I would think, what you're kind of saying, take advantage of the equity and the appreciation that you have right now. I mean, I think there's definitely a good argument for that. This particular woman, she did have a considerable amount of equity, and we were kind of looking like, okay, if you put this much down and if you buy your rate to here, here's how we can kind of make the payment more comfortable for you. And that's where she is right now, just kind of checking into that and seeing what she's comfortable with. But she probably is going to wait. But the more equity that you have in your home, that's, you can do a lot with that.
Right. You can put, if you're scared of the extra $300 a month, so okay. So put 3 years away in a different account for the $300.
Yeah.
If you need it, it's there for you to put in there.
And then, there's a lot of different things that we can do too, especially when you have the equity. And, a lot of times I'll tell people like, tell me how much you want to use on this transaction. Because then I can kind of work with the numbers. We can say, all right, let's put this much towards, the down payment, getting the payment here. And then, hey, let's go ahead. Let's try to get your interest rate down 0.5 point. What does that do? Because sometimes you get a little bit bigger bang for your buck when you buy down your interest rate
right.
1/8 point. Just general rule of thumb for in this market, it's about every $1,000 you put down, you save about $6 a month. But if you buy your interest rate down an eighth of a point. So you go from a 6.5 to 6.375. You're probably going to save, depending on the loan amount now. I mean, but it could be $12 a month, $15 a month. So that's kind of what we do when we're trying to figure out what's best for our clients. Figure out how to use their money correctly, where it's really going to pay off for them. And then there's the other side of the argument is that we do feel like interest rates are going to come down. Hopefully within the next, conservatively, I hope in the next 18 months or so, we're going to see interest rates continue to move down, hopefully get back into the mid fives, I think is what is a, realistic, estimate of where I think we could be on a conventional loan. And, if you're buying a house now, you obviously want to be comfortable day one on your payment.
Right.
But hopefully within 18 months, you can refinance. Lower your payment. And, going back to what you said at the beginning, if you're buying now, you're buying at a $200,000 sales price. You wait 18 months, how much is that $200,000 house going to cost? Is it going to be $220,000, $225,000? Maybe. But if you buy now at $200,000 with a 6.5% interest rate, hopefully in 18 months your rate goes down to 5.75.
Yeah.
Well, you've just saved yourself. You refinance, you probably saved yourself $100 a month.
And I think from an agent perspective, the more educated we are able to do on the front end, when I meet with them and we're just sitting down having a conversation, I'm like, okay, well, let's do the math. If you wait on this house, this market area right here for the past 5 years has a 4.5% year-over-year increase in this house. Yeah. So now you're talking $16,000. If you wait 2 years, you're adding $16,000 to here.
Yeah.
Well, what's the difference in the 0.5% in the interest rate? Then $16,000. Do the math with it. Are you better off taking it now? And you look at it 2 years from now.
Yep.
Am I ready to sell because I wanted my semi-dream home, not my really big dream home. But they can just go on. I think sometimes young couples don't really think like that because their parents have been in their same house for like 20 years. Who stays in a house for 20 years anymore?
My parents.
Yeah.
There you go.
Yeah, but that's right.
Yes.
But if you look at
Yeah.
the generations
Now,
that are
it's
coming
not.
up now, I mean,
Yeah.
No,
You
we
know.
moved. I think we moved twice in 4 years.
right.
Yeah. So it's not that way anymore.
It's just they start small and then, it was just the two of them. We fell in love and we got married and then, oops, we got a child and we have another one.
Yep.
I have a family right now in my neighborhood and I make fun of them all the time. I'm like, I know you are busting at the seams in that house because it was just you when you bought it and now you got 2 kids. So
Yep.
it's not designed for that.
Well, the thing that kills me is when somebody's renting and they're like, well, I'm going to wait till the interest rate comes down. You understand 100% of what you're paying right now
Right.
is not your
Yeah.
money.
Yeah.
It's not helping you at all.
Yep.
Yeah. No, it's
Yeah, you want to wait for a quarter of it,
Yeah, and I think that most of those people like that, they're thinking that they heard that just a few years ago interest rates were in the 2s. I mean, we had somebody that we refinanced a conventional 30-year fixed loan back in, I think it was 2021, could have been 2020, at a 1.99% interest rate. I mean, we're probably never going to see that again.
No.
And so you get these.
I don't want to be trapped in my house to get that again.
Yeah, well, I know. Well,
I don't want the reason behind, we're having to do that is because, we can only talk at somebody out our bedroom window. We can't.
Well, like Deidre said, it's better to pay 7% than 100% interest.
Yeah, right. Yeah. No.
Historically, we're still low. I mean,
Oh, yeah.
we're still low, and people don't understand that. They just know what COVID was, and they want to get back to that, and that's not going to
It's not ever gonna.
Yeah.
No. No.
It's not.
So
it's not gonna happen.
it would take some other crisis to get us back down in the 2s and the 3s on mortgage interest rates. So I mean, what if you're waiting for that? You're gonna be waiting a long time.
Right.
If you're a renter and you think that those days are gonna come back, they're probably not gonna come back anytime soon. But I think getting back into the 4s is within the next 2 to 3 years is completely realistic.
So buy now
Yeah.
and refi
Yeah.
in 4. The minute it hits, then just hit it, or
Get
you
an
sell it
investment
then. You sell it then, and you go. You upgrade the house, and your payment is probably going to be similar because the interest rate
Yeah.
is down.
Yep.
What else out there, guys?
I mean, nobody, like when you're working, you don't start off with your dream job. You're not going to start off with your dream house either. You got
Well, I don't know these days. There's some people
You
these
shouldn't.
silver spoon in your mouth, but you know, whatever.
Yeah, and this doesn't have to be here forever.
My grandson said he wasn't working unless it was $18 an hour, and I went, "Well, you're gonna get pretty hungry.
Yeah.
You're gonna get pretty hungry." But going back to the interest rate when it was 1.9, 2.5%, I mean, you paid $6 for a gallon of milk. So did you really truly save
Yeah.
any money?
Yeah.
You couldn't. I mean, it's like eggs now. I don't know.
Yeah.
You definitely can't buy any.
Well, that's been
Eggs.
something that's kind of been something that's come up in our world a little bit too. You know, we've got all these people who, you know, they're hanging on to their 2s and their 3 mortgage rates, not wanting to move, not wanting to do anything, you know, touch that. And I get that. You wouldn't want to touch that if you didn't have to. But then they've got their automobile is financed at 9-10%. Their credit cards have got a
Well, the
15,
cost
yeah,
of-
20.
And
you
the
know.
cost of vehicles
Now.
they're buying.
Oh yeah, they've gone
Yeah,
up.
they're like vehicle payments $1,200 a month. I'm like,
I mean,
Yeah.
that's half your house payment right there.
you know,
Well, what is it when someone can assume someone's loan
Okay.
or
Yeah.
assume the rates?
That is a tricky thing. They advertise it like it's a simple thing, and hey, just you can come and assume a VA or an FHA mortgage, government loan, because it's a little bit complicated. Because you got to have all the parties have to agree to it. But if it can happen, it's great. So if you have somebody that had an FHA mortgage and they refinanced it 2021, they've got a 2% interest rate, they're going to sell today, and they advertise that you can assume it. That's great for a buyer. But
There's fine print.
yes, there's going to be fine print, and ultimately it's going to come down to whoever the lender is on that. A lender can say, no, we're not going to let you assume it. So you have to find out all these things. We don't really see it that much because we don't deal with that, because it'd have to go ahead and be with another lender before we got to it. So I don't deal with it too much, but I have heard there are some challenges with it. So don't think it's just going to be the easiest, simple thing. I'm going to just get this 2% interest rate. There's a lot of stuff to check into on that.
well, I think they didn't realize is what I learned early on is that you're assuming from that lender.
Yeah.
The lender, the lender has to apply. You have to apply to that lender.
Then they have to say whether they're going to do it or not.
And it's that loan amount. So if it's, let's say that they're selling the house for $350,000 and they owe $250,000, you're still responsible for the other.
Where are you going to get
Exactly.
$100,000?
Yep.
Where are you going to get
Yes.
$100,000?
And I've heard of some lenders not allowing you to do a second loan to come up with that. They make you want to do it in cash, and that's probably their way of
That's what I've
forcing you not to do it. And then they probably tell you, but we can do this whole thing at a 6% interest rate.
Yeah.
So yeah, it's more complicated than they advertise it.
But do you really see much of that in the FHA world? Because most of those FHA loans are coming from they're going to sell those loans off. So,
Yeah,
right?
yeah.
I mean, most of the time.
Yeah, I mean the majority. Most banks they package up, hundreds of thousands of loans and sell them all the time. It's just it's another part of the industry. It's a moneymaker for them when they go to do that. I mean, even your big national banks will do it. Even you can go to Wells Fargo, and Wells Fargo can say, "Hey, we're gonna service your loan," but they can't guarantee that. A lot of times they'll transfer the servicing rights, everything like that. So yeah, I mean, you could do it. You could get transferred a few different times, and if you get with a lender who's not going to allow you to assume it, no real advantage to doing that. But
So if I get a letter in the mail and it says, "Oh, your loan has been sold," that doesn't mean you're a bad person, right?
No,
Doesn't
no,
mean
that's
you
a
did
common-
anything bad.
No.
I had to
common
call
practice.
and warn my daughter. She just purchased her first house.
Yeah.
I said, I'm just going to let you know in about
Yeah.
2 weeks to a month, your loan's going to be sold. What?
Yeah.
What do you mean? What do I have to? You just have to accept it and move on. Keep living in your house.
yeah, and I can understand that people would be, a little thrown off of that because they get this and they're like, whoa, where is it? Who am I making my payment to? But now everything's online now. Everybody sets you up with an online portal. It's pretty easy. Now you just want to make sure, the lender has to do a good job of making you aware that, hey, they're supposed to send you a notice that says we're transferring your servicing rights. So this is the company who's now going to be receiving your payment. And then they just, every mortgage company, you pay it, they collect the amount and they send it to the government, Fannie Mae,
Right.
Freddie Mac, so
Yeah.
not that big of a deal. But I do get that call a lot where they, people do get frustrated about that happening. I had somebody who I guess he'd come to us to buy his next house. He currently owned one, and he was like, I just want to make sure you're going to put me with a good, loan servicer, because he had been his last person that he went through. I think they had sold it with 7 times within 2 years.
That's crazy.
So that would be frustrating. I
Yeah.
get that, and that shouldn't happen that much. But I guess it can.
Yeah, and it's because like my daughter never checks her mail.
Yeah.
Never. She's all online. I was like, babe,
Yeah.
you've got to check your mail because
Yep.
I don't know how they're going to notify you. All these things.
Well, and sometimes they do it
Check
both
my
ways.
mail.
Sometimes
Yeah.
some of them they'll do it through email, but they have to show that they sent you something in the mail. Why, I don't know, but that seems to be the first thing of it. So, okay, anything else they need to know out there?
No, I guess I would probably just tell people, especially first-time home buyers. I mean, yeah, just you need to go through the process. You don't know until you actually try it, and it's really not that. It's not that difficult of a process. All we really do, we get your application that probably takes 10 minutes. We do have to pull your credit report. That is the thing that most people worry about.
But people don't realize that you still have like a time frame. Oops,
Yeah.
I pulled Alicia. I smacked the microphone.
There we go.
But they don't realize when you go to like renting, they're going to pull your credit. It's going to hit your credit.
Yeah.
With you guys, they're going to pull the credit, but you've got a little time to find a house and find all the things.
Yeah.
Check your credit online for free.
Yeah.
You're not going in there blind. You know what your credit score is before
Yeah.
you apply and know if you're going to be able to get approved.
Yeah, and it lasts, like when we get someone pre-approved, it lasts for 90 days. So you've got 3 months the time your credit report is run, you've got 3 months to find the house and get closed. And really, I mean, a typical closing time frame, I would say 30 days for people. It can definitely be quicker than that, especially if people do a good enough job on the pre-approval process where they submit their documents and that stuff. 90% of their work is done. So by the time you get a contract, it's really just work for us to do. And we get the appraisal, we get the title, you got to get insurance, but most of the stuff is already done. So you can close pretty fast. But what I would tell people to do is, go through the process. Don't be scared because, I mean, even if it's, you can't quite get pre-approved on day one, we're going to get you a game plan where, you can start building, and that way, if you have been making some mistakes just because you don't know, that you can start doing, the right things to get you in a better position in the future. So really, we get an application, we run your credit report. We're going to ask you for some core documents, which are just, if you're a salaried hourly employee, it's just your last 2 years of W-2 forms, 30-day pay stubs, 2 months of bank statements, copy of your driver's license. That's the core list of stuff that we need to see what we can do for you. And once we have that, I mean, a pre-approval process does not take very long. I mean, it can take 15 minutes and we'll know for someone. But I I would want people to not be worried about going through the process, you know? So.
Well, I think we're going to call it a wrap today. Big thank you to Nick for coming on with us
thanks for
today
having
with
me.
Hunt
Yeah.
Mortgage. So
Yeah.
Thank you for having me.
thanks, and we will see y'all next time.
Thanks for listening. Please remember to subscribe to our podcast on your favorite podcast platform or subscribe to our YouTube channel, Your Neighbor, Your Agents. Please visit www.yourneighboryouragents.com.